Hello, everybody. This is Rolls. I started doing these happy hours, and I did an impromptu one this week. And when I was looking at the chart, I talked a little bit about downside targets and where this might go if SPY and ES keep going down. And so I'm going to talk about that a little bit today. But first of all, I've got to put this disclaimer up. I'm not a financial planner. I don't recommend anybody taking my trades, and I don't give those out. Sometimes people ask me, well, what are you gonna do this week? Give me an entry and exit and a target and stop, and I just don't do stuff like that. Um, so you can ask me, but I'll say, hey, I give out levels and take a look at the levels and apply that to your trading style. So let's take a look here. Now, people on people on Twitter, you'll follow some people that are bears on Twitter, and they'll say, "Oh, this thing is going down. You know, it's going down the elevator." That's what they like to say. That it takes the stairs up and the elevator down, and this thing is headed down to the basement or the sub basement. That's usually not the way the stock market works. You can think of the stock market as rolling a ball up a hill, and you push really hard at the bottom, and it kind of, you push really hard, and it kind of shoots up, and then it rolls for a little bit up the hill, and then it slows down, and it slows down, and it slows down. And you can see this, it's coming up, and it's slowing down, slowing down, slowing down, slowing down. And then, the other side of the hill, depending on how steep the hill is, it'll start going on its own with some gravity pulling it down. But it doesn't, it's going fast, fast, and it slows down. And then it comes up here and it almost stops. And then it starts rolling the other way. Now, a ball rolling down the hill, it's not going to roll really fast. Right here, it's got to pick up some speed and head down. So usually it takes a while for this thing to turn over. And I think that's what they're trying to do, is I think they're trying to turn it over and go the other way. Now, does that mean that Rolls said the market's turning over? That doesn't mean that it's going to just fall off a cliff on Monday. So, I mean, don't anybody listen to this and say, I'm going to get a bunch of puts, or I'm going to sell 10 ES contracts. Well, I don't want anybody to do stuff like that. What I'm saying is that this is something that we need to watch and see if it keeps going. And if it keeps going, I'm going to talk a little bit about where I think it might go to. Right? So the first thing is, I was looking at this chart. I noticed, and I'm going to do ES because there's more data. We get 24 hours a day during the week, and there's there's not quite as many gaps as there is in SPY. And I know everybody's going, well, golly, I can't see your levels on there, and you don't do ES levels. And well, let's just forget about levels for a minute, and let's just look at some targets here, and these targets are going to be very similar on SPY. Some of these targets are going to be close to the same spot. So anyway, I was looking at this, and I noticed that one of my levels was holding really tight right here. So we zoomed up here, and then it came down. My level was holding tight, and then the aftermarket, it started creeping up, like they were juicing it up at night when nobody was looking. And I thought, you know what, this is an Elliott wave thing. I was looking right here, and I was at my mom's house doing my laundry because my washer was broken, and I was away from my trading computer, so I didn't put anything on. Sometimes I do that just for fun, just do an MES or two and see what I wake up to the next day with a bracket order that I'm not going to die if I wake up and it goes the wrong way. But I didn't have a chance to do that. So I woke up, and I was looking at my phone right when I got up, and I said, oh, guys, If I had some contracts last night, I'd sell. And so you look and see what happened. Right about when I was saying that, it started going back down, and it's doing this ABC down if you're an Elliott wave person. So it goes A, this is A down and B up and C down. And then you start looking at this some more, and you say, well, this thing went down to the 1618 extension, and it bounced. Well, what's another thing? This is the 20-day moving average, or Keltner channel people will say, no, that's not what that is. That's the mid. Well, it's the daily mid. Well, that's the same thing. The daily mid is the 20-day moving average. And look, we got a little bounce here, and then it's the 1618 extension. Well, they've stuck two things in the same spot to get people to buy it. People will move this up. They don't have to spend a lot of money on algos. Everybody and their brother knows how to do a fib extension, and they're like, oh, that's 1618. And then Keltner channel people will say, well, that's the daily mid. And then moving average people will say, well, that's the 20-day moving average. I'm going to buy this, and I'm going to get bullish here. So they might be moving this thing up for a little bit before they move it down. I wouldn't short the world from here. This might go down. All they got to do is push a button and it starts going down, but I don't think that's what they want to do. I think this is going to float up a little bit. There's some other things that I was looking at, some other charts like Google. Google is hitting an area of support. So maybe Google will bounce next week. Maybe it won't, but if it does bounce, it's sitting on support, and if you bought it, you've got pretty well defined risk, and if it works, then you might make some money, and if it doesn't work, you know exactly where to put your stop, so that if it dumps down, you don't just hang on forever. You say, oh, they're not going to move it up because they just went right under support, and they're going to take it down more, and then you don't have to worry about it. You might lose a few bucks, but that's what we do in the stock market. We take an educated guess, and we buy something on support, and then we sell it. Sell it on resistance, or you sell it, or you stop out when it dumps under support. I might talk about that in a minute. All right, let's talk about the downside and what might happen here. So this is the 20-day moving average, and let's say that we bounce up a little bit, like you're rolling a ball down the steps into your basement, and it starts rolling down the steps, and it bounces, and it bounces up a little bit, and then it'll come back down and go down, and it might bounce up. It might bounce down the stairs like that. The market doesn't move usually in one direction forever. It usually bounces around. All right, let's see what's going on down here. So the first thing is we're coming down that you're going to hit. This is the weekly. The 20-week moving average is right here. That's right around, look at that, 39.88 ES. Okay. So that you've got the 20-week moving average here. Well, look at this. This is the daily Keltner bottom right here. This kind of baby blue line up here. And then look at this. This is the 200-day moving average here. So you got three things. You got three things down here. Let me draw a little rectangle. Look at that. You got three things down here that are real close together. Within 30 ES points. And you know what they might do? They might mess around up here and smash all of those things together, just like they smashed a couple things together up there. They might smash all of these into the same spot. And then what you're doing is you're looking at this going, well, they'll turn the bears up on Twitter and say, oh, this is going to go down into the, into the center of the earth, and everybody gets bearish. And then people like me are going, now hold on a second, fellas. There's three things that they've just painted in the same spot. This might bounce here. And so what you can do is the same thing that I talked about during Google. You can say, well, if it goes down under here and then it starts banging around and starts going up, you might say, well, I'm going to try along here. And then I've got very well-defined risk. Got very well-defined risk. If it goes under here, then I know I'm wrong. And then you don't hang on forever, just like what I'm saying. If this thing starts heading down, then you said, no, man, the 200-day moving average is supposed to hold here. If it starts going down under that, you don't need to hang on. You need to say, I messed up, and I'm not going to hang on and lose my shirt. I'm just gonna get rid of it, and I'm gonna try again someplace else. All right, let's keep looking. Let's say things are getting really bad. There's another spot right here. I mean, looks like a really good spot. That this might stop here and keep going. We'll have to wait. See if we get some bad news going down here, and then maybe some good news changes, or maybe bad news. Maybe bad news hits more down here, and there's some bomb going off someplace, or balloons flying over the United States, hundreds of them, and we're all getting worried, and then it goes down more. Well, then there's another spot right here. This is a Keltner channel 2, and this is like more ATRs than the bottom here. And sometimes this is the spot. My purple line is the spot where this is like the maximum it wants to get down, and then it'll usually come up and let all the stuff catch up, and then it keeps going. It could keep going down, but this is a pretty strong spot too. And this is kind of funny that I don't know why. I mean, I must have something fib at the 5 times that I never see until I do stuff like this. So don't worry about this green line. That's nothing. This is just kind of dumb luck that's right there. But the next spot I think that it might bounce is this around 38, 32. And well, let's say that we get some end of the world news and Powell is raising rates to 100%, and things are getting even worse. Then you start looking down here at even more stuff. Then you notice there's some more Keltners that line up. And look at this weekly Keltner and the monthly are in the same exact spot. They're painting them in the same spot. Well, if we get down here really fast, they'll stay together. And what might happen is this thing goes down in here, and it goes, it floats around in here, and I'm go, oh man, the dark pools are buying like crazy right here. Let's watch and see what happens. And then they might just take it up out of here. So this is another spot to look at, 36, about 36.40 something, down in here. And then under that, things get a whole lot worse. It almost never will go under something like this, like around 34 something. But if it goes down a long way, this is kind of the place that I'd look at. I mean, this is like the bottom of the bucket kind of thing, and usually it doesn't go down past here. They'll take it back up. All right. Well, I've given everybody some downside targets here of what I'm thinking of. I'm thinking that we might bounce here, and then this would be a good spot if it comes up and they want to bounce it. This would be another good spot to bounce. And then kind of if the news is really bad and we get some markets in turmoil kind of stuff, this might be another good spot that they're looking at. All right, thanks a lot, everybody. Have a great weekend. I'm going to put this on YouTube and give everybody a chance to take a look. Thanks.